You're now listening to the Tax Smart REI podcast, the number one tax podcast for real estate investors. Thanks for tuning to this week's episode of the Tax Smart REI podcast. This is going to be one of the final episodes of the year, and we're going to be talking about 2025 tax changes, what to expect the new administration coming on board, as well as the Corporate Transparency Act. Believe it or not, there are more updates there that you're not going to want to miss. And like I said before, it's going to be one of the last episodes of the year. We always take that Christmas week off, so there will be one more before the end of the year. But one thing we did want to touch on before we dive into 2025 tax changes and what we expect to happen there is the Corporate Transparency Act, the 2024 CTA. There is new news, and it's exciting news, and it's that it has been stayed. All right, so a Texas court has ruled that there's going to be a preliminary injunction, which has put the Corporate Transparency Act on hold for now. Now, I just want to note that's a preliminary injunction. It's not permanent. So there will be further actions taken to determine whether or not the Corporate Transparency Act will indeed be in play. But right now it's on pause. One more thing to note on that is the AICPA is saying that you should be ready to comply with this. And FinCEN is still accepting voluntary submissions, right? So right now, kind of the overall sentiment is that it's not over yet. Right now, there's no need for you to comply with it, but it could come back into play. And if you want to get ahead of the curve, you can still file. So conservatively speaking, if you want to get ahead of the curve, go ahead and file your FinCEN reports as if it's going to be in play. But right now, there's no penalties if you do not comply. And we just won't know for sure until we have further notice on what actually happens. But we'll be keeping everybody up to date here.
And maybe just to comment too, like what that means for, like Tom's saying, for you as a listener, if you've already filed, there's nothing to do, right? Just want to state that plainly. Nothing to do, nothing to change. This is only going to be really a big update for those of you who are maybe waiting till the last minute to do this, or waiting as long as possible. Maybe you were hoping for something like this to come about. It has, but keep in mind the Department of Justice did file an appeal just 2 days later after this came out from the district court. So keep in mind, this is like, pretty serious stuff that they're, challenging it, but then they're trying to push it through and appeal it. This is the whole legal part that goes into new, laws like this. So be ready, like Tom said, if you haven't done it, to file it. And here's the thing too, just, practically speaking, if you've got one LLC and you're the sole owner of this, maybe just go do it, right? Based on, what you've got going on. If you're someone who's like, hey, I've got like 50, investors and all these things, do I do it? It's probably not a bad idea to get all that information now if you are going to wait, rather than like, hey, it's Christmas Day, this appeal actually got approved and now I'm scrambling and everyone's on holiday break or something like that. Use your own discretion of how you're going to do that, but it is, and we would just want to preach to you guys, be conservative in this, be ready to do that. Obviously you can still submit, but be careful if you're on kind of that wait and see approach. Yeah. There could be some negative ramifications if they do actually appeal this and that is successful. So just wanted to highlight that.
Yeah. I mean, I definitely have to agree with you there, especially for people who have a lot of LLCs or have a lot of investors, a lot of information that they need to collect. It'd probably be prudent to still collect that information, even if you do not pull the trigger on filing, because I get it, right? I get people's mindset out there is like, I don't want to give this information to the government in the first place, which is why all these lawsuits and things are taking place, because people don't want to do this. They do think it's an overreach. However, like I said, it's a preliminary injunction and it is being appealed. So it could be that all of a sudden, the courts find out that it's all good and we're going to move forward with this. And now you'd have to go and scramble to get all your information together. So probably the best thing to do is collect all the information, keep your finger on the trigger. And, if it turns out that you don't need it, well, great. Now everybody goes back to life as normal. But if it turns out you do need to file, you'll be thanking yourself from doing a little bit of this grunt work now. Moving past the 2024 CTA, we figured this is relevant given the timing of this, as well as we're talking about 2025 changes. We want to get a little bit into what will happen in 2025 and what we expect to happen with the new administration and what information we do know as of today in terms of what's going on with the government, the Congress, what conversations they're having. I think first things first to realize is that many of the provisions of the Tax Cuts and Jobs Act from 2017 from Trump's first term are going to be expiring this year, okay? in 2025. We're talking about the 20% qualified business income deduction, the QBI deduction, is scheduled to be eliminated. The individual tax rates will revert to the pre-2018 levels. So right now, the highest rate's 37%. That'd be jumping back up to 39.6%, and so on. The standard deduction will be cut in half. Personal exemptions will return. Child tax credit will be cut in half. The SALT limitation, that 10K limit on state, local, and property taxes, all that's going to go away. There'll be the expiration of the higher AMT exemption phase outs. The state tax exemption will be cut in half, and qualified opportunity zone investments will be ending, or the ability to invest will be ending at the end of next year. So that's what we stand to lose if no action is taken. And right now, we do know through what Trump said on the campaign trail and the current sentiment of kind of the House and what they want to do is that they do want to extend and potentially expand some of the Tax Cuts and Jobs Act. No matter how they do that is going to be what we're going to be talking about next.
Yep. And this will be very interesting to see how these things play out, because so many of these things were kind of new, like the opportunity zone, qualified business income deduction. These were like completely new things, right? Changing the standard deduction, cutting it in half or doubling it. That was like some of the things that was just, they were able to move. It will be interesting though to see, does this get extended just how it was from the start of 2017? Or is it something that they even alter? Maybe the qualified business income deduction changes to 15% or just some sort of tweak, but we don't really know until we see it in law. And there's a lot that they will say, but we'll kind of see what actually happens. But yeah, very curious to see what actually comes about if these things don't expire.
Yeah, absolutely. And kind of just to give people some context, if you were at our year-end tax impact event, you may have seen this during our presentation or during Brandon's presentation more specifically on how they intend to get this passed. And they intend to do this through the budget reconciliation process. And to give some context on how that works, you need a simple majority. So rather than getting 60 Senate votes, you just need to have the majority of the votes, which is a lot easier to get. It's a lot easier to get people behind and a lot easier to pass things through. However, there are some issues doing this, right? We have the Byrd rule, which says that you cannot expand the deficit past the budget window, which is usually 10 years. It cannot impact Social Security. And Trump did an interview very recently where he stated he's not going to touch Social Security benefits for anybody. It's not going to change in terms of what anybody's getting. And then also, there are some other things that are limited in there. But the bottom line is they want to do this through the budget reconciliation process rather than go through some of the more formal mechanisms that would make things a little bit more permanent.
Yeah. And just one other comment there that's interesting. So in the Senate, right, we've got 100 votes. So 60 would be 60%, right? And like Tom's saying, if it's just the Byrd rule, then it would just be a majority. So we need to have, quite a few more than just, the Republicans are currently in kind of the power. If you want to say the majority there, they're at 53 right now. We'd even need to have some kind of Democrats to agree to that and all the Republicans. So we need to be pretty significant. And if I'm not mistaken, Tom, I think it was the Tax Reform Act of 1986 where that was the last time where we got actually 60 Senate votes. Yeah. So it's been a long, long time. We're almost at 40 years. So very traditionally, it's in recent years been the Byrd rule, and very, very uncommon to get that 60 Senate vote. So just some history there and some context for people. So yeah, most likely going to be this Byrd rule that we're talking about.
Yeah, I mean, it's hard, even with, with the Republicans having the majority of the Senate, like getting all of the Republicans on board and not dissenting. And then, if they could get support from Democrats, all of that, it's challenging to get everybody on the same page to get that majority. I think they might call it a super majority, if I'm not mistaken. That's 60 Senate votes, but it'll be interesting to see what happens. But my guess is that they're talking about using the budget reconciliation process and just seeing how things are going. It's probably what's going to end up happening. In terms of what would happen is if they extended everything, I think it would add $4.6 trillion to the deficit. So how they go about that process, I think they're talking about tariffs is some ways to offset it. Doge, which is not the coin, not the cryptocurrency, but the Department of Government Efficiency, they want to cut a bunch of waste and programs that they think are not essential there. They also want to make things more efficient. Those can be levers that they pull to help offset some of this deficit. Yeah, I'm not an expert by any stretch on government budgeting or anything like that, but those are mechanisms that they're looking to pull on to help offset some of this stuff. It could be also that not everything within the Tax Cuts and Jobs Act gets a blanket extension, There's going to probably be some level of compromise and back and forth. But one thing that I did want to note, or two things that are definitely going to be a strong push for, will be the return of 100% bonus depreciation, as well as the SALT cap being lifted. There is bipartisan support for the extension of 100% bonus depreciation. We saw that this year in 2024 with that bill getting passed by the House, which included that extension, but was ultimately killed in the Senate for who knows why, but it was killed before it was passed. But that has bipartisan support. And in the SALT cap, I just know there's a lot of people who don't like it, and a lot of people are against it, especially in the Northeast and I'm sure California, where there's a lot of people paying a lot of state tax and a lot of property tax, and they're getting capped that 10K limit. So it'll be interesting to see, but I think those two things are good chance of those things coming back.
With the end of 2024 right around the corner, now's the perfect time to start planning what moves you're going to make to optimize your tax situation before the year ends and get a head start on 2025. Whether you're looking to use the real estate professional status, the short-term rental loophole, cost segregation studies, 1031 exchanges, or anything in between, our team is here to help you through proactive tax strategy and planning, painless tax filing, and streamlined bookkeeping services. After helping thousands of investors save millions of dollars in taxes, we want to help you. So whether you're looking to finish the year strong or get a head start on 2025, what are you waiting for? Head on over to www.therealestatecpa.com/podcast to request a free 30-minute discovery call today. We're looking forward to learning more about your situation and how we can help. Again, that's www.therealestatecpa.com/podcast to request a free 30-minute discovery call. We look forward to hearing from you, but for now, right back into today's episode.
Yeah. And all of our listeners are like, yes, please, 100% bonus depreciation back. But maybe just to translate that a little bit for you as a listener, because I've had a couple clients, ask me, hey, if we do get 100% bonus depreciation, when might that come into effect? First of all, who knows? But I think kind of what we're thinking is it's probably a January 1st, 2025 thing, probably at the soonest, probably not a 2024 thing, I think would be most people's guess. That's a little bit more retroactive. But here's the thing too, like I've had people say, should I hold off on, say, placing a property in service or acquiring a new property in 2025 compared to 2024? Because they're kind of playing this game or this gamble of like, well, it could be 100% if I get a new property or place a new property in service in 2025 compared to, I know that it's probably going to be 60% here in 2024. So just be careful of that kind of, you're making a bet. And if you want to do that, that's your right to do so. But we aren't saying on this show, like, yes, it's going to for sure come back. We don't know when, we don't know if. And this is kind of just like a little bit of an expectation that one, we're hoping for, but things that we've seen, we kind of expect something like this to come back. And who knows, maybe it's only a return of 75% or 80%. And that goes for several years. And then they phases down for years in the future. Who knows? This is all kind of a guess at this point, but we're just kind of trying to lay out some expectations for those of you listening to what actually might be coming. Obviously, we would be, throwing a party if we get 100% bonus depreciation back for properties placed in service. So just want to kind of comment on that. Don't make too many differences in what you're going to do just based on this percentage in bonus depreciation. Go forward with a good investment. Put it in service when it makes sense for you to do that for the investment, not just for tax savings. Don't let the tail wag the dog there, like we commonly say on the show. So just wanted to plug that.
Yeah, no, absolutely. And I'll say this, right? We know what they want to do, right? We know what they're talking about. We know that bill supported from, again, 2024 supported 100% bonus depreciation. But here's the reality, right? When the election first came out, they were talking about getting taxes passed within the first 100 days, right? Like they were all hyped up, like we're going to do this in the first 100 days. And if it happened within the first 100 days, there's a possibility that it could be retroactively done to 2024. But first of all, that's just a possibility. Secondly, since then, now there's been talk about they might not be able to get this done with the taxes in within the first 100 days, right? There's reports now that they want to focus on doing this in the latter half of the year because they need to focus on border security, energy, military spending in the first 100 days, right? Which, arguably more important than tax reform, but they want to get something done with taxes before the end of this year due to the fact that all this stuff is expiring, like we mentioned before. So just keep everything with a grain of salt. This stuff is constantly evolving. We had the Build Back Better Act that everybody was talking about for however many months. People were like selling properties because they thought the capital gains rate was going to go up or 1031 exchanges were going to disappear or be capped. And none of that ever came to fruition, right? I remember with the CARES Act too, the CARES Act that got passed in 2020 during COVID, there was a handful of provisions in there that were in up until like the final proposed bill. But then once it was passed, there's a handful of things that never made it in. So nothing's ever final until it's final. Because again, even with control, even with the Republicans having control of the Senate, they have a very narrow majority in the House. There's going to be negotiations and compromise and back and forth. And so, like I said, right after the election, you were hearing 100 days, and the first 100 days are going to get tax policy passed. And then now all of a sudden it's, whoa, wait a second here. We might not be able to get this done within the first 100 days because of board security and energy and all these other things that might be higher priority. So just take everything with a grain of salt. And like Ryan said, don't let the tax tail wag the dog. It's important to understand what is up for expiration, what could be expiring, and have an idea of what could be coming up the pipeline, but nothing is set in stone.
Yep. Just got to be careful and stay tuned. We'll obviously keep people updated on this. We'll keep people updated on the Corporate Transparency Act with that filing. So stay tuned to our episodes and we'll continue to be talking about this and our blog and everywhere else that this will be relevant. So stay tuned as we continue to find out more information.
Yeah. All right. So we don't want to belabor the point here. The reality is, to sum it up, much of the Tax Cuts and Jobs Act are expiring at the end of 2025. The administration does want to extend and expand some of those provisions, including 100% bonus depreciation. We know that it was talked about. There is bipartisan support about it. The thing, just keep everything with a grain of salt, again, is this is rapidly changing. Every day there's different things that are being said. Right after the election, they want to get to some of the first 100 days. Now it's within 2025, right? So we don't know what's going to happen. Like Ryan said before, don't let the tax tail wag the dog. Do what's best for your business today with the information we have available, just knowing that it's a big question mark of whether or not 100% bonus depreciation would come back retroactively. I know it's what everybody cares about the most. As for the 2024 CTA, the Corporate Transparency Act, there is a preliminary injunction that's staying it right now, meaning you don't have to comply. But just kind of be prepared, get yourself in order in case you do ultimately have to comply with it. You're not scrambling to get everything done, wishing that you would have just kind of stayed the course. And we'll wait and see what happens there. We'll be updating everybody in 2025 regarding the Corporate Transparency Act and as developments evolve with tax changes. Ryan, do you just want to kind of give everybody a quick reminder of what they might need to tie up before the year ends? I know that this episode is going to be released with basically what's going to, for all intents and purposes, going to be the final week of the year, the final working week for many people. So what they might need to keep in mind.
Yeah, just a couple things off the top of my head. One would be bookkeeping. Start to get that wrapped up, catch up, even if you're, a few months behind, start to get that caught up so you're not doing several months all at once. It's always a best practice, kind of see where things are at. It also helps for tax planning too, right? You might say, oh, wow, I have a good profit here. Is there any sort of another strategy, right? Maybe some improvements or repairs, kind of thinking about real estate investors. Is there any improvements or repairs I want to do before the end of the year to kind of get a few more deductions? And I know I was going to do that anyway. Another thing would just be considering tax loss harvesting for any of you who have brokerage accounts. Maybe you've got a good amount of gain, right? Bitcoin has gone up. The stock market in general is 30-ish or whatever it is today up. So if you've got some of those and maybe you've got some in a loss position, capitalize on that before the end of the year. That is something that you have to do by December 31st. Just want to comment on that. Have to get that done. Another thing would be a time log. If you're looking to claim the real estate professional status or the short-term rental strategy, check where you're at, right? You've got a few more weeks here before the end of the year. Just kind of see where you're at, see what information you need to gather. There has been a couple of people I know who get to kind of catching up over the holidays and they're like, oh my, I'm actually behind from where I need to be for whatever reason, like the 100-hour rule. And they're like, well, I need to go to my property and spend a day there, a couple of days there and catch up on some more hours or something like that. So check your time log, get that caught up. Another one would be consider a cost segregation study. That is something you don't have to get done by December 31st, but consider if you just want to get that started and get that kicked off with a cost segregation study company. If you have kids and you're paying your kids, you're hiring your kids, you need to make a payment to them before the end of the year. That can go with other like employee contributions for retirement accounts. So check on that. And or you might even consider any other kind of retirement contributions that you need to make. HSAs you could look at. You can always do that after the year. And now I'm just kind of going off into other ones. So there's always a lot. That's why we have a whole episode dedicated to just thinking about year-end tax savings. But those are a couple off the top of my head that people need to be aware of.
Absolutely. And the last thing that I'll say here before we wrap up is that we are accepting clients. And as we kind of head into the end of the year, I know a lot of people might want to take their foot off the gas, but the reality of the situation is the first handful of months of every year are some of our busiest months. So you don't want to wait. If you're thinking about changing CPAs or you're looking for a new CPA, head on over to our website now, get that call, request that consultation now, so that you can get that scheduled right away, and you're not scrambling to kind of figure things out as the year kicks off. So if you're interested in becoming a client, now is the time to get that conversation started. You can go to www.therealestatecpa.com/podcast to go ahead and request that consultation. We look forward to learning more about your situations and how we can help. And lastly, if you are a CPA or an EA, now is the time. If you're looking for a move, we have a handful of positions still open. And once the year kind of kicks off, things kind of start to get locked in there too. So if you are looking to make a move before busy season, now is the time to get that conversation started as well. Send us an email at onboarding@hallcpallc.com with your resume, your desired position, and why you want to work for our firm. And we look forward to hearing from you as well. There will be one more episode before the end of this year, but that's it for today's episode. We'll catch you on the next one. Signing out.